Hey, what's going on, guys? This is Daniel here, one half of the Kwak brothers. And in this video, we're going to talk about what the frick just happened. Like, wow, I woke up this morning, I rolled out of bed around 7 a.m., I had a meeting, and I saw the phone, and I dropped my phone, and I just couldn't believe it. So in this video, we're going to talk about what happened, and also why I kind of saw this coming, about 5-6 months ago. And then we're also going to talk about the two things that we have to pay attention to now, the two biggest things, and not just with crypto, but overall macroeconomics, what I believe is going to happen to the future in terms of macroeconomics, and ultimately, how do we protect ourselves, and what do we ultimately have to do? So that's all we're going to talk about in this video. But before we go ahead and talk about all that stuff, don't forget to like this video, subscribe to our YouTube channel. Okay, got that done. So let's first talk about how much crypto has dropped literally in the last 24 hours. So I got an article here by Bloomberg saying that Bitcoin itself plunges 25%, draining 500 billion in market cap value. And it's crazy how we literally just did a video 2 weeks ago talking about how massive the crypto market cap has become. I mean, Bitcoin itself had a market cap at one point of over $1 trillion. And we're talking about how literally overnight that dropped in half for all cryptocurrency. So, I mean, I invested in crypto. I pretty much put in the same amount of money as I would if I were to go gamble in the casino, because it's something I just don't have control over. But at one point, Bitcoin at one point hit low as $36,000. So again, this is what I said about crypto literally about 5-6 months ago.
Question is, I want to see it. I'd be really curious to see the journey that Bitcoin's going to take going from a commodity to an actual currency. Because right now I just see it as a commodity.
Right.
You know, I do. And if you want my honest opinion, I think it will always be a commodity. Right? Mm-hmm. It just so happens that we are in a time right now where cash is trash. And the reason being is because they're printing a bunch of it. Right? And the markets are overly inflated. That's why I feel like Bitcoin is so popular, is because, you know, a lot of people buy into the infrastructure. Mm-hmm. They buy into the blockchain technology is what they're buying into.
Yeah.
Bitcoin just happens to be the most popular kid on the block.
Now, here's the ultimate question I'm sure a lot of you guys are asking. Am I worried, right? Am I worried? Yes or no? A little bit of both, right? So here's why I'm not worried initially, because, you know, history doesn't repeat itself, but ultimately it does have patterns. Now, generally speaking, if we're talking about inflation, because ultimately, let's talk about it, let's be honest, that's what happened, right? Investors got super freaked out by inflation due to the April report coming out showing 4.2% increase. Jerome Powell says that he wanted to shoot for 2.5% inflation, and everybody freaked out once, you know, things happened according to what he said they would happen. And we've seen this time and time again, right? It happened in the 60s and 70s, post-Korean War, how we had all this money spent in war, right? And I think I watched a clip this morning of me, Kevin, talking about that, how there was money printed and spending happened because of the war, and then the war stopped ultimately, and it just kind of did a ding on the economy. And that's kind of what happened. Whenever we see times of very high inflation, that freaks a lot of investors out, and they tend to allocate away towards stuff like cash, gold, silver, tangible assets, i.e. real estate. Now, here's the part that does worry me. Here are the two big concerns I have. And first and foremost being that how leveraged is the overall crypto market. A lot of YouTube creators are talking about it, how a lot of deleveraging and leveraging within the crypto markets will affect certain bubbles, asset bubbles, what that does to consumer confidence. The second thing, and this is actually probably a bigger worry than the first one, how a lot of different platforms will prohibit withdrawals. So as we saw this morning, Binance literally reported that they were prohibiting withdrawals. And this is an actual tweet, by the way, at 8:05 a.m. So Ethereum and ERC20 withdrawals are temporarily disabled due to network congestion. Thank you for your patience and apologies for any inconvenience ahead. And even at one point, Coinbase actually had issues with network congestion. Now, I get it. They resumed withdrawals and resumed normal activities literally an hour later, just around. But who's to say that this network congestion can't happen again? So ultimately, how is this going to affect the market? How is this going to affect the economy? Well, in my opinion, a lot of people are asking, well, Daniel, are you buying the dip? Are you going to buy into Bitcoin again? For me, I typically tend to wait a couple days, the dust settle, before deciding to buy some sort of dip. Now, in terms of how this is going to affect the economy, we're in a very unique situation right now. Our labor markets have literally been shut down. I myself have tried hiring 3 people with jobs and wages well over $20 an hour, and I've had extreme hardship trying to find that. Walmart, all sorts of companies across the board. It seems that unless you're making $75,000 a year, you're more inclined to want to stay home and continue to collect government assistance. Now, the big thing is, in my opinion, I think my prediction is going to be, I think the Biden administration is going to do a fourth stimulus round. I personally think they're going to do that. I think they're going to see a lot of freaking out in the private, because it's not just crypto, it's also stocks, it's also the S&P 500 that's down this morning. I think a lot of forces in the inflation market and labor market is going to eventually push Biden administration to do a fourth stimulus check. Because at the end of the day, they care about votes, right? They don't really care about the economy. They don't really care about what's going to happen. At the end of the day, they care about votes. So now let's get to the real juice of the video. What are some things that we can invest in that stand the test of time? Because let's be real, crypto has extreme volatility written all over it. So there are two things that have stood the test of time when it comes to investment vehicles. One of those being insurance and the other one being real estate. Now, myself and a very good friend of mine, Matt Sapala, actually made a video that you will see right there about inflation, about real estate, and also insurance. We had a great dialogue and a great conversation. It was released this Monday. Again, it should be right there, unless it wasn't there, and that was really, really awkward. But let's talk about real estate for a second. I love real estate for three main reasons. So number one, constantly, real estate has time and time again has shown that it can hedge against inflation. So if you guys saw a great interview I did with George Gammon in our YouTube video, you guys will know that he said himself that real estate never tends to increase. People think that, right? But there's actually 4 different ways that real estate tends to go up. It's number one, forced appreciation, where you actually increase the income on a property, therefore making it worth more. You have earned appreciation, where you negotiate a certain price compared to what it was appraised for and assess that, therefore giving you instant equity. There's passive appreciation, which is the most common one, where things happen because of inflation. And there's the last but not least, phased appreciation, where things happen in the market, such as, a big developer comes in and they build a Whole Foods, or in, literally 5 minutes from my rental property. I have a 4-unit, and they built the second largest Amazon distribution center in my home state, 5 minutes from where my rental property is. So it's phased appreciation. And George Gammon, he himself said that real estate tends to inflate more than increase in value. So for me, real estate is hedged against inflation in terms of its price, because at the end of the day, real estate is worth what people are willing to pay for it. And also same thing with rental income. At the end of the day, for my income properties, I could care less how much they're valued, as long as they have a very healthy loan to value ratio and the bank is not going to call my note due, and I don't have a balloon coming up that I have to be worried about, worried about the equity positioning in my building, because that's a very real thing, right? I don't want to distress that at all. But at the end of the day, if I'm in a safe loan to value position and my income and my rental income is continuing to come in time and time again, I'm not going to care what my value is going to be. And it's the same concept. If the values go down, right? So if a value went down for a stock or cryptocurrency, people are going to freak out like they did this morning. But for me, if the price of my real estate, if all my rental properties go down in value, but everyone's still paying rent, fantastic. I'm still laughing my way to the bank. I'm still laughing my way to the office. And I love what I do. So it's the same concept. As inflation increases, rents are going to increase as well. Literally in my neighborhood, they raised the rent $200-300 per unit. It's amazing. Well, not amazing for me because I still rent, and for a lot of other people, but it's just the way the market moves. All right, number 2, it's a tangible asset, but different strategies work for different scenarios. So I love real estate because it's physical. You can touch it, you can feel it, you can kick it, right? You can do whatever you want. You can't really do that with Bitcoin or Shiba Inu, right? It's very tough to do that. To the moon, by the way. I bought a bunch of Shiba Inu this morning, right? But that's between you and me. All right, but different strategies work for different parts of the market. For example, if I have a market that's really, really hot, like it is right now, development and fix and flip is a phenomenal strategy. However, if the market's down, well, guess what? I can do stuff like short sales, I can do portfolio acquisitions, I can do long-term seller financing. There's different strategies that within the real estate investing space that are going to work with my tangible asset. And last but not least, you can make money different ways. There's not only cash flow, which is in the equity space known as dividend investing, but I also have principal paydown, long-term wealth that I can accumulate by leveraging the money that I have today, which is phenomenal considering how much weaker the US dollar is getting by the second, right? We made a video, 8%. 8% the US dollar has dropped in purchasing power compared to the other world currencies. There's depreciation, where there's tax advantages and tax benefits for me investing in real estate. And there's also appreciation, where the value of the real estate goes up depending on what I do, what I negotiate, what happens to the market, and also what happens with inflation, henceforth the inflation hedge. So ultimately, is this video about me telling you to pull your money out of cryptocurrency and put your money in real estate? No, right? For those of you guys that buy the dip, I get it, right? Do what you will. At the end of the day, it's your money, it's your decision. I personally, bought a bunch of crypto this morning because, I can afford to lose $500, $2,000, $3,000 here and there, right? But what I would recommend you do is look at your investment portfolio, look at what you're investing at, and look at some aspects where you can have long-term tangible assets like real estate, because this will stand the test of time. So again, guys, I hope you enjoyed this video. If there's anything that you disagree with, or if there's anything that I messed up on, I'm sure there were plenty of things I messed up in this video. We literally threw this video in like 5 minutes. Comment down below what your thoughts are. I just mainly want to get the conversation going. And of course, if you like this video, please like this video, subscribe to our YouTube channel, share it, and I'll see you guys in the next one.